Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Exits Ishiba. Japan's embattled Prime Minister plans to resign, according to local media, just hours after agreeing a deal to cut US tariffs to 15%. Stocks in Asia gained the most in a month. Round 3, the US Treasury Secretary says more trade talks with China will resume next week in Stockholm. We will speak to Scott Bessent at 12 p.m. today. Plus, banking back down. UniCredit drops its bid for rival Banco BPM, blaming a lack of government support. We will bring you the earnings from UniCredit in the next couple of seconds. Let's get to the earnings story then around the Italian banking giant that is UniCredit, with the stock up 55% year to date. Net income in the second quarter, it is a solid beat for UniCredit. Second quarter net income coming in at 3.34 billion euros, well above the estimates of 2.5 billion euros. So a big beat in terms of second quarter net income. Revenues a little softer in the second quarter for UniCredit at 6.13 billion, just marginally below the estimates of 6.17 billion. I think you can call that in line for second quarter revenues. In terms of fees and commissions, coming in also essentially in line with the estimates at 2.12 billion euros. Net interest income, we know the analysts were scrutinising this on expectations it would come in a little slower. In the second quarter, net interest income coming in at 3.46 billion euros, essentially also in line with estimates. In terms of 2025 projections, UniCredit is raising its 2025 net distribution guidance, and it is raising its 2027 net to at least 11 billion euros, up from about 10 billion euros. So a key line there as well in terms of raising its net distribution guidance for 2025 and 2027, seeing full year distribution of at least 9.5 billion euros this year and raising it for 2027 as well. It's a beat when it comes to net income in the second quarter for UniCredit and raising its distribution guidance as well. A key stock to watch today. The stock up more than 50% year to date. Let's get to a broader check on these markets. Earnings is part of it, but it's really about the trade deals coming through, notably, of course, from Japan, adding fuel to the fire of this global stock rally. You are seeing that in Asia, and European Stocks 50 futures pointing to a strong session, rallying 1.3% on the back of this news around a Japan-US trade deal. FTSE 100 futures here in the UK looking to add 51 points. S&P futures held at those record levels, but at the end of the close on Tuesday looking to add 0.2%. Nasdaq 100 futures looking to add 22 points as we count down to the earnings from Alphabet and Tesla later today. Mega cap tech reporting in the US session. Let's flip the board and have a look cross asset then. There was, though, a weaker bond auction out of Japan, and that is weighing on treasuries, with yields up 2 basis points on the 10-year at 4.36. Euro dollar at 1.17, stronger US dollar so far in the session. Euro down 0.1%. Brent at $68 a barrel, and spot gold currently down 0.2%. But the focus is on the rally in Japan, with automakers soaring double digits. Let's cross over right now to Avril Hong, standing by in Singapore for a check on the Asian markets.
Absolutely, Tom. We're seeing these phenomenal moves in auto stocks in Japan. The surprise for markets, a positive one from Trump, that there's a trade deal with Japan, but more importantly, that there could be, according to local media reports, 15% tariffs on automakers versus the existing 25%. This had been a key sticking point amid negotiations, given how important they are for the Japanese economy. So that rally you're seeing very pronounced, including from the likes of Toyota, that at one point in the session climbed by the most low since 1987. Amid all this trade talk, it was really interesting to see the yen was pretty range-bound, and then it weakened sharply as we got word that potentially the Prime Minister might soon announce his resignation. Now let's flip the board and take a look a bit more at the stock moves that we've been seeing today, the extent in which we've seen the climb on the transport stock gauge. Not only is it on track to erase the declines for the year, it's also helping to potentially lift the Topix to the highest close since July last year. Remember, that was prior to the yen carry trade unwind. But before we get ahead of ourselves, it is worth noting here that when it comes to the tariff on autos, 15% is still higher than pre-Liberation Day. And with earnings season underway, investors are still going to be keeping a really close watch on the outlook from these automakers. Flip the board again. If you take a look at Japanese bonds as well, remember today we had the 40-year auction, which showed us that they're not excited, these investors. It's still the concern on the long end, stagflation, weakest demand ratio since 2011. On the short end, sharp moves on the 2-year, almost behaving like next week's BOJ meeting is going to be a live one. Swaps traders also pricing in a hike before the end of this year against the backdrop of this trade deal. Tom.
OK, and we watched the global bond markets on the back of that weaker auction out of Japan. The politics, of course, in focus as well. Abraham in Singapore, thank you very much. Indeed, what a session over in Japan. As we've been reporting, of course, Japan's Prime Minister Shigeru Ishiba is set to resign by the end of August. This, according to local media reports. It comes after Japan, of course, signed that trade deal with the US that will subject the nation's imports to a 15% levy, importantly, autos as well. President Trump calling the agreement the largest trade deal in history.
They just signed the largest trade deal in history. I think maybe the largest deal in history with Japan. We worked on it long and hard, and it's a great deal for everybody. I always say it has to be great for everybody. It's a great deal. A lot different from the deals in the past, I can tell you that.
OK, for more, let's bring in Kazunori Takada, Bloomberg's managing editor for Japan. Thank you for taking the time. A busy time, of course, for you and the team. Japan's Prime Minister then getting the trade deal across the line before that August the 1st deadline with the US, but now apparently ready to step down. What more do we know about the fate of Ishiba?
Yes, so after the devastating sort of loss at the election over the weekend, Ishiba had said that he would stay as prime minister until the trade negotiations were sorted, given the importance of that for Japan. Now that's sort of come to an end. We're getting a lot of reports from local media that he's looking to resign from the post, with some reports saying that that could come as early as this month. Others have said that he will make up his mind on whether to stay or not by the end of August. So there's still a bit of uncertainty over exactly what Ishiba himself is thinking. But in one word, I think what we're looking at in terms of the political outlook for Japan is that it's far from clear, and it's very hard to predict what will happen over the coming weeks. We don't have a very clear contender yet within the LDP who would take over the role if Ishiba were to step down. There have been some reports in the local media floated that perhaps former Prime Minister Kishida might be interested. A few other names like Takaichi or Kobayashi who have run as who have also raised their hands for the LDP presidency in the past. Keep in mind that the coalition does not have majority in parliament, so whoever takes over will have a big challenge in first just getting the nomination of prime minister through parliament, because they cannot do it by themselves, and therefore would need to seek the help from other parties. So it's a lot of political jockeying that's expected to come in the coming weeks, and it's multiple scenarios are predicted, but at this point it's really hard to tell.
OK, so political uncertainty, at least in the days and weeks ahead for Japan. And yet, on the trade front, a little bit more certainty with this deal that's been struck with the US. What are the details at this point?
Yeah, so the amount of the investment that Trump has said is one of the biggest in history is the $550 billion package, which Ishiba has also said that would come, and some of it would come in the form of guarantees and loans. Based on information coming out of Washington, we've heard that this could potentially include a joint LNG deal project in Alaska. But again, on this one, a fair bit of uncertainty on the timing of these investments, where and when they would be spent. That's still to be seen. Other things that have come out from that is, as was mentioned with the auto sector, the 15% tariffs on autos. Japan also, again, this is from Washington, agreeing to buy 100 Boeing aircrafts. And Japan also looking to expand the amount of non-levied rice imports so that the U.S. portion would become bigger in that pool.
Okay, Kazunori Takada, Bloomberg's managing editor for Japan, on that trade deal and, of course, the reports around the Prime Minister of Japan looking to step down, possibly in August. Thank you. And US Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick will join Bloomberg's surveillance later this morning. So stay tuned for those interviews, of course, and their reaction to the trade story. Let's take a look now at how wider markets are reacting to the latest tariff headlines. Bloomberg's Valerie Teitel is here. And Valerie, what a session over in Japan. And this is leading, of course, to a broad uplift once again for global equities.
No, that's right. And leading to some positivity, Tom, perhaps around a U.S.-EU trade deal being soon to come. Remember, we thought we might have to wait all the way up until the deadline of August 1st to see some of these deals come to fruition. With this one coming a bit early, it really paints a solid picture on getting an EU trade deal early. We are seeing European stocks, European futures being lifted quite a reasonable amount off of the back of the positivity in the Nikkei. I think the question for Europe today is, do we see this kind of boost to European automakers after those Toyota shares surging 15% in the session over in Asia? Tom, the biggest jump for Toyota in 16 years. Do we see that kind of positivity lead into Mercedes, into BMW, with perhaps the market assuming that the EU does also get some reprieve on that 25% car tariff number? But let's flip on and look at how the FX market is trading more broadly. We are, it's odd to see that the yen isn't necessarily strengthening off the back of this. It's weakening because it's more focused on the reports of the Prime Minister Ishiba's resignation. We are not seeing a positivity into the euro this morning, even though those European equity futures have given a big boost. So kind of some interesting price action there for you, Tom. I want to end when it comes to the fixed income reaction. The yields moving higher in Japan is having an implication on U.S. 10-year Treasury yields. We're 2 basis points higher following that 6 basis point rise in the 10-year yield. Remember, JGBs have really been setting the tone for global fixed income in the last few weeks. So if we do see some kind of political instability, also causing some instability in JGBs, watch out for those Treasury yields as well. Lastly, I want to end on something that's taken place in the U.S. we need to talk about is this meme stock mania is returning. We saw shares of Kohl's yesterday surging around 105% intraday in the session as it becomes the new meme stock favorite du jour.
OK, meme stocks are back. Take of that, or make of that what you will. Is this market getting a little frothy at the edges? Bloomberg's Valerie Teitel, thank you very much indeed. Let's get back to the earnings story with a focus on UniCredit. A solid beat on the second quarter net income. Let's get the details, the context with Bloomberg's Tom Metcalf, who leads our EMEA finance coverage. Talk us through the numbers then, Tom.
Yeah, so as you say, solid set of numbers. I think the biggest thing probably for shareholders will be these increased guidance around distributions. So previously they were looking at about 27 billion of distributions through to 2027. Now they're guiding 30 billion. But the most interesting context of the result is the night before, UniCredit came out and said it's dropping its very sort of controversial bid for Banco BPM with a lot of opposition from the Italian government. And so you've got to look at those results, I think, in that context as well. Very much UniCredit setting out its stall saying, look, we're moving on. look, we're in a great position organically. We'll obviously continue to look for deals, but the big focus today should be on what's happening underlying the business.
Okay, and on that underlying business, I mean, the shares have just stormed this year, up more than 50% year to date, up more than 50% for UniCredit year to date. Is that performance? What can keep that performance going for UniCredit?
Well, I think Orcel came in and made sure, he kind of did all the sort of low-hanging fruit, and then kind of started looking at these bigger deals as a way of maybe keeping that momentum going. So if those doors are shutting, look, I mean, I think the results show focus on shareholders, and in their results they have a great line about we're the most shareholder-focused banks. They're really kind of doubling down on this idea of dividends, buybacks, and of course, keep that net profit section rising. I mean, within the results, there's a few sort of areas of concern, I suppose. Loan loss provisions were up a little bit, so it's how they manage that. As the economy, maybe weakened slightly from where it has been the last few years. But broadly speaking, I think shareholders will be quite pleased that Orcel might be focused more on the organic side of things, and perhaps a difficult deal to sort of complete the Banco BPM one is now off his plate.
Well, how long is that off his plate? I mean, so Banco BPM, they're dropping the deal. I mean, so much for bank consolidation in Europe. It's not happening in Spain. It's not happening between UniCredit and Commerzbank, at least for now. It's not happening in Italy itself with this deal being dropped. Is this just kind of on ice for Orcel and the team at UniCredit, or have they completely walked away from Banco BPM?
I think on ice is probably the best way of thinking. I think they're still interested, and if I think circumstances change very significantly, i.e., let's say Rome kind of really changes those conditions it was seeking to impose, or some other sort of, it just becomes a deal they have to do. But right now, I think pretty heavily on ice. But you never say never, I think, with Andrea Orcel.
Okay, Tom Metcalf, thank you very much indeed. Breaking down the earnings coming through from UniCredit, the top line beat, of course, but what it means for potential mergers and acquisitions going forward for that lender. Now, here's what else to think about then today. Talking of earnings, we're going to get numbers crossing from Tesla. The stock is down about 19% year to date. Focused, of course, on anything they have to say about robotaxis, autonomy, and cheaper models from Tesla. Those earnings dropping later today. And Alphabet and IBM earnings as well. Alphabet shares essentially flat year to date. We're scrutinising, of course, the picture when it comes to the cloud business and what they are doing to fend off competition in search. And then after the markets, Moncler earnings, so the luxury retail space in focus. Coming up, the leaders of France and Germany are meeting in Berlin as the rift grows over who will lead a fighter jet program. We will have the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday, everyone. Tesla expected to provide updates on its outlook for the full year amid, of course, an ongoing sales slump when it reports earnings this afternoon. Investors will be keen to hear an update on the company's autonomous driving projects. Bloomberg's Asia transport reporter Danny Lee is joining us now with a preview. So, Danny, Elon Musk, of course, been seen alongside Donald Trump in the first 6 months of the administration. Now he is, of course, no longer part of that administration. That ended badly. Will any of that show up in the earnings? We know, of course, sales continue to fall, particularly in Europe when it comes to Tesla.
Yeah, I mean, it's been a fascinating tale of two quarters. In the first quarter, we saw US President Donald Trump spruiking sales of Tesla, encouraging people to buy Tesla EVs towards the back end of that first quarter. And then into the second quarter, we've seen this disintegration of this relationship, but particularly from that first quarter where we saw sales fall 13%, missing quite widely on EPS and on revenue. Given sales have fallen in this most recent quarter 14%, we are likely to see a further slide. Just depends on will this miss analyst expectations, and given Elon Musk has left the administration, I don't think that's enough for consumers to be as encouraged to buy Tesla vehicles across the piece. But even like in the biggest US state, California, where they do buy a lot of EVs, Tesla sales continue to fall 21%. Bucket, wider than the number of sales across the piece for EVs in general. So there is a weakness in the core markets, and as we've seen overseas, Tesla sales across the whole globally, from China to Europe, still continue to struggle.
Wow, a 21% drop in California. What else then, Danny, will you and the team be looking for when it comes to these numbers?
Well, given Elon Musk now has taken great control of Tesla, of its sales, particularly of North America and of Europe, it'll be looking to see what Elon Musk will outline, particularly for this turnaround picture, whether it be around the automotive business or specifically around the low-cost affordable vehicle that many analysts in particular are looking out for to try and revive that Tesla growth story. And even around the Robotaxi, we've seen a lot of the testing and the rollout in Austin, where they've been putting their Uber-style Robotaxi out on public. But can that be expanded quicker? Is that going to start making money sooner rather than later? And in particular, we are looking to see more closely this top line around growth. Will that be revised? How will that show how Tesla's going to evolve in the coming months and coming years, particularly? So this is all very much one to watch in this upcoming earnings period.
OK, great preview for us of the Tesla earnings. Bloomberg's Asia Transport reporter Danny Lee. Danny, thank you. Sticking on all things Elon Musk, SpaceX has told its investors that CEO Musk could return to politics. We've been talking about politics there with Danny Lee in the future. The company made the admission in paperwork sent to investors discussing its latest tender offer. SpaceX's most recent offer values the rocket and satellite maker at about $400 billion US, which would make it the most valuable private company in the world. The fighter jet dispute that's threatening to overshadow a meeting between German Chancellor and the French President. The details of that story coming up. This is Bloomberg. German Chancellor Friedrich Merz and French President Emmanuel Macron are set to meet in Berlin to address escalating tensions over the Future Combat Air System jet program. The dispute centers on a leadership tussle between the two main defense contractors, France's Dassault Aviation and Airbus. Let's talk to Bloomberg's Benedict Cummel, who leads our global aviation coverage. What then, Benny, is this dispute all about?
Well, it's really between Airbus on the one side, which sort of broadly represent the German side, and on the other side you have Dassault representing the French side. And the question really is, who is going to lead this program? They did have an agreement saying we want it to be broadly equal. There's a third company in this, Indra of Spain. So the idea was, let's have sort of equal share of this program, the Future Aircraft Combat System. But then Dassault came out and said, we would like to have a leadership role in this. The reason being, we make the Rafale fighter jet. We know a thing or two about building these. We should really be in control. We can't be some sort of happy socialist union here. We need to have one party in control, and that's us. That obviously didn't sit well with Airbus. All of this broke into the open last month at the Paris Air Show. So you had Airbus on the one side saying, why are we relitigating this whole issue? We thought we'd had an agreement. This is really tiring. Then on the other side, you had Dassault coming out and saying, well, this is the way it should be, take it our way, or we might even walk away from the whole program. So this is where we're at right now. So you're bringing the adults in, as it were. You're bringing in the political leadership and saying, guys, we need to sort this out. You need to sort this out. It's Europe at stake. It's one of the key programs at stake. And hopefully today and in the next couple of weeks, they will find some kind of an agreement.
So, Benny, to that point, and briefly, do we expect the two leaders of these two nations, France and Germany, to actually get to a point where they can close this deal and move on?
Well, that's the big question, isn't it? Whether they will sort of hit hit on the table and say, guys, please get your act together, and whether France and Dassault will go along. We did hear from Eric Trappier, the CEO, yesterday saying we still want to have a leadership role. He denied that they want 80% of the program. That was something that was out there previously. So that's not the case, but he does still want that leadership role.
OK, Benedict Cummel, Bloomberg's managing editor for space, aviation and defence. We will, of course, watch that meeting and any resolution that comes about, if there is one, between Dassault and Airbus on that jet and fighter jet programme. Coming up, Equinor's second quarter profit falls on softer oil prices and a prolonged outage at an LNG plant. We speak to the company's CFO. That is next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Exit Ishiba, Japan's embattled Prime Minister, plans to resign. That is according to local media, just hours after agreeing a deal to cut US tariffs to 15%. Stocks in Asia gain the most in a month. Round 3, US Treasury Secretary Scott Bessent says trade talks with China will resume in Stockholm next week. We will speak to Scott Bessent at 12 p.m. today. Plus, SAP reports cloud and software revenue up 11%, just short of estimates. Our interview with the CEO of Europe's most valuable company is coming up shortly. Let's get to these markets, though, because that deal between Japan and the US is boosting global equities, already, of course, at or near record highs. European Stocks 50 futures pointing higher by a full 1.2%. The Asian session has been pronounced in terms of the gains, and we'll break down Japan shortly. FTSE 100 futures looking to add 47 points. S&P futures stateside after remaining at record highs by the close yesterday, looking to add and build on up by 0.3% today. Nasdaq 100 futures up 32 points. Let's flip the board and have a look cross-asset then. There has been a focus on the bond market, so beyond the exuberance in the equity market, some concern when it comes to the longer end of the bond markets, with sovereign debt and 40-year bond auction in Japan weaker than some had expected, and yields are up in Japanese sovereign debt, and you're seeing that reflected in US treasuries as well, with yields up 2 basis points on the benchmark 10-year at 4.36. Euro a little softer, down 0.2% at 117. The Japanese yen has always down around 0.3, is also down around 0.3%. Brent currently trading up 0.5 on the trade optimism, lifting oil prices, and gold a little softer, with the opposite to that dynamic, the risk haven, of course, softer, down by 0.3%. Back to our top story, and reports that Japan's Prime Minister may step down now, because we can bring in our reporter Alice French for more on this. Alice, give us a rundown then of the trade deal between Japan and the US, and what markets were expecting, the significance of 15% for the auto sector.
Yeah, good morning. So look, it's been a very exciting day, and the day's not yet over, but it's been a dynamic day for markets here in Tokyo. As you say, that news this morning that we have 15% tariffs on Japan, which is quite a lot lower than I think most market players were expecting. That, you know, the previous threat was 25%. At some point, Trump had threatened as high as 35% on Japanese imports. Particularly autos were also looking ropey with that 25% tariff set before. So this is really good news. I think a lot of investors had already factored in at least 20% tariffs. So we've seen those moves in the equity markets. We've seen the Topix up at a record high this afternoon. That, you know, all of that jubilance really reflected in equities, particularly in autos. We've got Toyota up over 15%, its biggest intraday rise since 1987. So you can really see that positivity being reflected in exporters. And yeah, I think this really exceeded a lot of people's expectations.
Yeah, that's remarkable that you have to go back to 1987 to see these kind of moves when it comes to the auto sector of Japan. Can this be prolonged? Do we think, Alice, we're still waiting for details on this trade deal? Is this a knee-jerk reaction from Japanese equities, or is it a significant repricing around a more benign trade scenario?
Yeah, like you say, I mean, I think that it remains to be seen whether this rally can be sustained. I mean, having said that, you know, the Topix and Japanese stocks, they have been rallying in the last few months since we had that Liberation Day downfall, and that's on hopes of this tariff deal. But I think the reaction today shows that, yeah, this good of a deal was not factored in yet. I mean, you know, risks still remain, like you say, on the details of exactly what the terms are of this truce. We already know that Trump has said that, you know, Japan has agreed to invest $550 billion into the US. Obviously, that could be quite a lot of capital flight from here. That could also weigh on the yen. That could potentially bring some, you know, some issues for the economy longer term. And so I think investors, you know, will be kind of looking towards the longer term implications of this after the dynamism of today dies down. But certainly in the short term, I think the general mood here today is that this is a big tailwind for the stock market.
OK, Bloomberg's Japan stocks reporter Alice French, thank you very much indeed for an update in terms of how the Japanese markets are responding to this trade deal. The Japanese Prime Minister, of course, according to reports, set to step down. Back to the European earnings story right now with a focus on Norway and the energy giant that is Equinor reporting a drop in second quarter profit, missing estimates. This as the Norwegian energy giant was hit by softer oil prices and a prolonged outage at its liquefied natural gas facility in northern Norway. We're joined now, I'm very pleased to say, by Equinor's Chief Financial Officer, Torgrim Reitan. Sir, thank you for taking the time. How do these results set you and the business up then for the quarters ahead?
Thanks, Tom, and good morning, and very good to be with you. Yeah, so we deliver, strong operational results and production growth. And I can give you one example. Johan Castberg, a new oil development we put into production 3 months ago, is producing on plateau 220,000 barrels per day. As such. So underlying results are very strong, and we are delivering as we have promised. We deliver production growth. We are able to neutralize inflation through our cost programs. We generate a lot of surplus cash. And we provide a capital distribution of $9 billion this year. So this is, going as we have promised and delivering well and according to what we have said.
What assumptions are you making? We talk about the fact that softer oil prices was a bit of a drag in terms of Q2 earnings for you in the business. What assumptions are you making about oil and gas prices as we push into the second half of the year, particularly as these trade deals start to be inked?
Yes, thanks. Of course, it's in the markets. It's a very volatile situation. So we have assumed oil and gas prices approximately where they trade currently for the full year. We have a split of our production with 50-50 between oil and gas, and oil has come down by 20% since last year, but gas prices are actually up. So in Europe, gas prices are up 20% since last year, and in the US, 80% up. So we produce into this environment, and of course benefit from the strong gas market. In the oil market, we do see sort of a rather tight situation now, but many commentators think it sort of will be a well-supplied market going into the autumn. The cuts from OPEC is gone. But it's a very, very fragile situation, as we have learned. We have seen the turmoil.
What are you seeing? Yeah.
Sorry.
Yeah, for sure. Torgrim, what are you seeing in terms of gas demand this winter? Are you bullish on gas demand this winter?
It is a tight situation. This year, gas storages are 20% lower than they were last year, and also below the 5-year average. And it is driven by sort of a warm weather and a heat wave in Europe, driving demand for gas to power, but also fillings of storages in Asia. So quite a lot of the LNG cargoes are moving to Asia, and there's actually a drop of cargoes coming to Europe by 25%. So it is a tight situation. It is a vulnerable situation. Of course, there are LNG capacity coming to the market, but I think we all need to watch out that it is a tight market that clearly can be volatile, and then prices can be, of course, be significantly higher as well. But I think it's important to remember, it's a $12 market. Our production cost is $2 into this market. So clearly, we are very well positioned to be Europe's largest supplier of energy into this, and we are very committed to deliver with quality and be reliable.
And you took an impairment charge of close to $1 billion, $955 million linked to the Empire Wind project just off of New York. The Trump administration blocked it, and then they unblocked it. You've been doing a review into the project. Where does that review stand? What is the delay around getting phase 1 off the ground? How confident are you about phase 2 of that project?
Yeah, okay, great. So first of all, we are very satisfied that we were able to reverse the stop work order. So very happy to see that the project is back in execution, and that is going well. When it comes to the impairment, that is disappointing to report, but it is a result of changing regulations. So there are very little probability for more offshore wind projects coming in the US over the foreseeable future. And that is impacting, a project that we have related to, staging facilities as such. So that's what's driving the impairment. Disappointing as such, but it is driven by regulatory changes as such. Empire Wind 2 is unlikely that will be progressed. It sits there. We don't intend to push it forward currently, but have all the focus on Empire Wind 1, which is on track and will be delivered. We aim to deliver power to the market, and by end of next year will be a significant contribution to power into the state of New York, and I'm very happy to report that.
Okay, Equinor's CFO. Torgrim Reitan, on the back of those earnings. Sir, thank you very much indeed for your time. Let's stay on the energy space, but with a focus on electricity and solar and wind as well, with Iberdrola over in Spain starting a €5 billion share capital increase. This after the company reported second quarter earnings that beat estimates. Again, Iberdrola launching a €5 billion share capital increase, a stock to watch at the open, 8 a.m. UK time. Coming up, Europe's most valuable company warns of pressures caused by a weaker dollar as second quarter earnings fall just short of estimates. I'm going to be speaking to the CEO of SAP. That is next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. SAP has reported cloud and software revenue growth of 11%, just short of estimates, amid concerns over US tariffs. Europe's most valuable company also says that it expects currency fluctuations to hurt full-year growth by potentially 3.5 percentage points. The CEO, Christian Klein, joins us now. Very pleased to say. Christian, thank you for taking the time. I'm just reading through some analyst reaction, and the word cautious and caution is coming through in terms of the analyst response to these earnings. What is behind that caution, the cautious commentary coming through from you and the team?
Yeah, first of all, thanks for having me. Good morning, Tom. Look, I mean, when you take the macro uncertainty out and, of course, currency headwinds, I mean, look at the underlying performance of SAP, and it was just stellar. I mean, the cloud revenue, which is growing by 28%, this is even an acceleration compared to Q1 by 2 percentage points. The backlog is now up to €18 billion, showing the resiliency of SAP. And even more important, when you look at innovation and AI, over half of the deals embedded AI, showing the strong demand of our customers for business AI. And yes, of course, we see the macro uncertainty out there. We see the currency headwinds, but what we control is our own performance. And that was really, really good this quarter.
Okay, so your own performance was strong. What is the extent, though, of that caution amongst your customers when it comes to the tariff uncertainty? What are you hearing from your clients, and to what extent are they kind of slowing down maybe some of their orders?
I mean, Tom, what we are seeing in a very few industries, take the U.S. public sector, take manufacturing. I mean, there are already customers who got hit hard by tariffs. And obviously, there we see some elongated sales cycles. I mean, they have tighter cost controls as they, already feel the pressure out of the tariffs. And these are the moments where we have to, of course, convince even more with strong business cases. The good piece is, Tom, when you look at our half-year 2 pipeline, that is actually very strong. And the customers see actually our software, our AI, as a solution to overcome those challenges. We still just need to, of course, work more diligently with some of the customers who already got hit hard by tariffs.
European stock futures are up this morning on expectations that maybe Europe can emulate Japan and get a deal with the US. If Europe does not get a deal with the US, what will the impact be on SAP, do you think?
I mean, the good piece is when you look at SAP, we are doing business in over 100 countries in the world. So we are having a resiliency just by the coverage of all of the geos. We are also covering 25 industries. Still, of course, what is for us very important is predictable trade. And so we, of course, also looking forward that also Europe can really cut a deal with the US because we need it. I mean, when the overall economy is going down, I mean, obviously no one is immune against that. That's why I'm still hoping that, Europe can follow Japan and also, agreeing to a deal with the United States.
Yeah, and look, you obviously have close contact with the German government. You're the most valuable company in Europe, after all. What signals are you getting, Christian, from the German government around the likelihood of a deal between Europe and the US?
I mean, from what I know, of course, there are ongoing negotiations, and they are negotiating also in good faith. I mean, they really want to come together. And, talking to each other is the first step. Now, the second step is that both sides are willing to compromise to find a deal. So I'm staying optimistic now that they're going to find a deal now in Q3. That would be important. I would say, there are only winners on both sides of the ocean if they can find a deal. And I guess with that spirit, also the German government is leaning in.
30%, around 30% of your sales coming from the US is the biggest single market for SAP. And you've talked about the currency pressures, the weaker dollar is a drag. Do you expect that drag to be there and to show up in the results next year as well, Christian, in 2026?
I mean, it all depends how the currency, will develop. I mean, of course, if it stays like that, of course, we will gonna see a further currency impact. But we always guide at constant currency. I mean, this is, what we can control. And there, of course, we expect an ongoing strong business. The currency is hard to influence. If it stays like that, obviously there will be, a further impact. But again, currency, fluctuates, over the last 5 years a lot. And what really is for us important, that the underlying performance of SAP obviously stays strong.
Yeah. Is there more you can do to mitigate the FX effects in terms of hedging?
Yeah. Yes. I mean, of course, we are hedging, obviously. And then, of course, second, what we also then, of course, are doing is, again, across the geo. I mean, we are closing contracts in all parts of the world. We have huge multinationals. We can also close certain contracts in local countries. There is, of course, certain things what we can do. Again, Tom, for us, it's very important that pipeline is strong. We actually see strong execution so far in the year, and that is, of course, our main focus. And then the currency, of course, there are certain things what we can mechanically do, and we're gonna do that.
Yeah. What is the AI demand? How much of a catalyst, of a driver, will that demand for AI services from SAP be, do you think, in 2026?
I mean, Tom, given now that we already delivered 40 AI agents, no matter if it's about financial close, cash conversion, about better quotes, better pricing, understand better the consumer trends, or about supply chain resiliency, the customers are really leaning in. I mean, we are, as I said, 50% of the deals are already including AI. The adoption is going up. And the customers, and that is for me very important, they see the productivity increases, after applying SAP Business AI. And of course, that now that we are delivering more and more on top of our AI foundation, and together with our new data offering, Business Data Cloud, I actually, of course, expect that we see a further surge in Business AI also in 2026.
Okay, a further surge in Business AI in 2026. On that backlog, before we let you go, Christian, the backlog of 18 billion euros, there's the support coming through. What does that backlog of orders look like by the end of 2025?
Look, that really depends now on the second half of the year. I mean, of course, we said pipeline is strong. We have a really, really good pipeline coverage. On the other side, there is this macro uncertainty. So it will now all depend on, can we really execute on all of the pipeline? And so the current backlog will further grow. To what extent really depends then on macro uncertainty. And of course, if execution stays strong, as in half year one, we confirmed our outlook. So we stay positive for the year.
Okay, SAP CEO Christian Klein, thank you very much for your time, of course, on the back of those earnings. A stock for you to watch as well, of course, at the open. Now, some other stories making the news. Nokia has cut its guidance for the year, citing a weaker US dollar and tariffs. The Finnish telecom equipment maker now expects operating profit for the year to be between 1.6 and 2.1 billion euros, down from its earlier guidance of as much as 2.4 billion. Nokia says the bottom line hits from tariffs will be between 50 and 80 million euros. ASM International's second quarter orders have fallen 4%, missing expectations. Bookings of ASM's chip-making machines have flagged as the semiconductor businesses of some of its customers, including Intel and Samsung, cede leadership in the AI race. The Dutch company says the decline in orders was mainly due to lower advanced logic and foundry bookings, while sales of its leading-edge machines were, quote, robust. Chipmaker Texas Instruments, a key supplier for producers of cars and factory equipment, tumbled in late trading after stoking fears that a tariff-fueled surge in demand will be short-lived. Though the company issued a third-quarter forecast that beat most estimates, the outlook was more guarded than some investors had anticipated. And India's Prime Minister Narendra Modi is due to arrive in the UK for a 2-day visit where he's expected to sign a trade deal with Prime Minister Keir Starmer. The pact, which was agreed in May, cuts tariffs on cosmetics, vehicles, alcohol and other goods. It's Britain's biggest trade deal since Brexit and India's first with a European economy. And Ozzy Osbourne, the global rock star and self-styled Prince of Darkness, has died, aged 76. The singer for heavy metal group Black Sabbath gave a farewell concert before 40,000 fans less than 3 weeks ago. After leaving the group, he went on to a solo career and later starred in his own hit reality TV show. Plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. What a big day for Japan, of course, striking that deal with the US on the trade story. The Prime Minister Ishiba expected to step down. That is according to reporting from local media. But also a weak 40-year auction, and you're seeing the ripple effects in terms of yields up on the benchmark 10-year over in Japan to the highest level since 2008. So the sell-off in the sovereign debt of Japan, and that is having a global ripple effect. You're seeing that in treasuries as well, with yields up across the curve. So just one to remember as we think about the political volatility, uncertainty in Japan, with expectations as well, potentially of more fiscal spend. That is leading to pressure in the bond markets. Let's flip the board and have a look in terms of the preview on the earnings front. Coming up today, Tesla earnings, and they have seen, of course, sales slumping, not just in Europe, not just in France and Germany, but in the US as well, particularly in California. You've seen a drop there of almost 20%. So when it comes to Tesla, you've got to think, of course, about what has to be said from Elon Musk around robotaxis, around new, cheaper models. You're expecting revenue. These are the estimates, 22 billion, 22.8 billion US dollars. That is the estimates. But again, it's the commentary on robotaxis, it's the commentary on autonomous vehicles and cheaper models that will be in focus. Alphabet earnings as well, also coming up later today. The stock is about flat year to date. The cloud business is seen as the biggest profit driver going forward, so there'll be scrutiny of that as well. And anything they have to say about ensuring that Google search is protected from that competition from the likes of Perplexity, AI and others, whether they can, of course, build a moat around that. Gemini as well, the latest model, any updates on that front will be scrutinised. Alphabet earnings coming up later today. The opening trades is up next. This is Bloomberg.